Sunday. It's Sunday, April 19th, 2020. This is All About Your Benjamins and your weekly mixtape and week in review video. You know, I always come to you and say this week's going to be short, and I always ramble on and get going, but I honestly think this might be one of our shortest weeks ever. So let's get to the news that may or may not be impacting your financial plan and portfolio. And just a few articles you'll see on the blog, always coming from the Wall Street Journal. That's my go-to source just to get what's going on, rather than try to read through a bunch of different publications. Just going there to get the main things that are happening in the economy and in the markets and around that are impacting you. So I hope that you over time have gotten a Wall Street Journal subscription or get by on the few every month that you're able to read for free. But let's get to them. So obviously coronavirus is still going. The IMF came out and said that the global economy has most likely gone into a recession, and that it will probably be one of the worst global recessions since the Great Depression. No one really knows how severe it's going to get. Do not forget that 2008 was a global event as well. We've been through this before. Does not mean that it is fun, but I don't think that this prediction that we've gone into a recession on a global front is a big surprise. So I think they're just stating kind of something that's the obvious, but that headline is out there. We're probably in a recession. We'll be in a recession. I would expect the U.S. to be in a recession as well. How long? Who knows? But the final reminder on this topic, and we'll move on to the next one, is recessions are normal. We never know when they're going to occur. We never know what is going to be the event that causes it. Does not mean that it is fun. It doesn't mean that's something that we want to look forward to. But if you've been watching these videos over the last couple of years, I've been trying to hammer home that eventually we're going to have a recession. So it doesn't make it any easier, but I hope that just knowing that this is something that we've gone through a number of times and we always manage to make our way out, brings a little bit of peace of mind. And obviously, if you're going through a situation where you're not working, you've lost your job, you've been furloughed, hearing that we're going to make it through doesn't make things better. Hopefully, these government programs that are coming through are assisting you through this time period. We get through it, the curve flattens, it stays flat, and things don't ramp back up, and we get back to rebuilding our economy here. Maybe by the end of the summer, I hope. Global recession is most likely happening according to the IMF. I don't think that's a shocker. Jobless claims were above 20 million. I think it's 22 million claims. There's another 5.5 million or so this last week. So we're just continuing to see more and more people being furloughed and laid off, going to unemployment. And unemployment has the kicker right now. There's an extra $600 for the unemployment benefit. So one of the things I'm beginning to see is that there are some people who are almost voluntarily going on unemployment because they can make more. I hope that these types of benefits don't deter people from going back to work when things get better, make it easy for them to just stay home. I really like to believe that there's good in people, and most people are not taking advantage. There will always be some people who take advantage of programs. I would really believe that most people are taking this because they need it and not taking advantage of it. But unemployment, we had it below 3%. We're right at 3%, and now it's skyrocketed up. So we'll keep an eye on this. Once we get through the virus, then it's going to be unemployment and economy that we really pay attention to. Speaking of unemployment, the small business loan programs, the payroll protection plan, hit its capacity when it comes to the dollars being allocated for that plan. So there's no more money in that pot right now for small businesses. Now, I would have to believe that they will come to the table with another plan, inject more money into it. They've already said that they would do that, so I would expect another round of small business loans going out there. Again, I mentioned with the unemployment benefit, some people out there are going to take advantage of it. We're seeing stories on the small business loans of situations like Ruth Chris or Shake Shack or the Harvard Endowment taking money, big chunks of money from the plan for theirs when it's debatable whether or not they are small businesses, or in the case of Ruth Chris, taking all these independent franchises, applying those individually, but allocating the dollars to the overall organization to do what they need to do with it. So, I'm not in this situation of knowing what their books like and whether or not they really need it. To me, when I think about small business loans, I think of our local businesses, small businesses that need help, not big publicly traded corporations that have other means to access capital. But unfortunately, when you put together bills like this, real quick, there are loopholes. And if we want to get into the conspiracy theory of politics, that maybe those are there by design. So, pockets continue to be fed and friends continue to get money that they need. At the end of the day, there are businesses that are being kept afloat because of these loans, but right now they're capped out. So we'll see what happens from there. But if nothing gets passed, I would imagine those unemployment numbers are going to continue to increase as some of the small businesses that have been holding on, waiting for these funds, and now they don't get them, are shutting down. I believe that's the case in the article that I shared. One thing that is important is a change of topic. One thing to understand, the next piece in here is about the stock market and ignoring the economy. And it's important to remember that the stock market is not the economy. They are two separate things. There are times where they move together. So when the economy is doing well, you'll see the stock market continue to do well. But there are times where the economy still shows it's doing well that the stock market begins to go. The stock market is pricing forward out in the future, 6 to 12 months. So why, and the reason to bring this up, why would we see the market rebounding 30% from the lows just a couple weeks ago to where we are today when we have unemployment at highest levels, continuing to rise? Well, one, it could be unreasonable investing. It could be that things were oversold and people bought in, and now we might be overbought. I don't know the direction is going to continue to go, but the reason you see the stock market 30% higher in just a few weeks when there's not really a lot of good news, actually there's worse news, is because the economy and the stock market are two separate things and they don't always move together. So don't try to figure out why, because no one really knows. We can tie stories to them. We can make analogies. We can say, hey, because of this, this is why, but no one really knows other than that's where the market is going. Will it continue? Will it come back? I don't know. If I had to guess, I would imagine that we see the gains over the last couple of weeks get clawed back as part of this. If we're in a bear markets have very high bull market or very high runs, and then it comes back. But maybe we are at the beginning. The worst is behind us, and then things move forward. We won't know until the future. It will always be looking in the rear. So don't try to figure it out, but just understand that they're not always connected, and sometimes they don't make sense. And don't spend your time trying to figure it out. Again, it leads to having a financial plan, guiding your portfolio. I believe in long-term diversified portfolio, keeping costs low, making changes sometimes when necessary, but not doing anything crazy, especially not trying to predict what the markets are going to do. Finally, the last article talks about short sellers betting against the market. It's at the highest level in years. So real quick, what a short seller does, they're actually hoping that prices go down. And they can do this on a stock level. They can do this on a index level. So you could buy the S&P 500 or you could root for the S&P 500 to go down. Short sellers, you think about they're wanting the markets to go down. We don't really like them, but they do have a place in the markets of kind of checks and balances. So what happens when you short sell? Basically, you borrow shares of the stock or you borrow shares of the ETF for, say, the S&P 500, and you go sell them out to the market today. And your expectation is that you're going to be able to buy them back at a lower price down the road. So you sell it up higher, you get those proceeds, you go back and you buy it down at a lower price, and you get to keep the difference. So that's how a short seller makes money. And we see these numbers rise when we think that prices of a stock or an economy or a market are too far gone. Are they right? We don't know. I bring this up because short selling can add a little bit more volatility to the markets. One, it could drive prices down, and when it continues to drive it down, you see the short sellers jump on top of it, and it speeds up the downside. It can also accelerate things up because there's this thing called short covering. So if you have bought with the expectation of buying lower, and you see that the price continues to go up, you want to get back in and get your shares out of there so you don't have to keep on getting the prices up. So what ends up happening is short sellers will have to go buy as the prices rise to get their shares back, so they limit their losses, because if it keeps on going, the losses keep on rising up. So that exceeds the buying, which brings the prices up and kind of speeds things up. So you'll hear short covering, and that'll kind of take things to the side. So the whole point to that ramble is, if short sellers are at all-time highs, that could add a little bit of volatility beyond what we're already seeing in the markets. And we don't know if they're right or wrong. I've got the battery warning, so I'm going to wrap this up quick. So that's everything for today. Check the mixtape down below. Great blog post this week. Subscribe at All About Your Benjamin. Subscribe to the YouTube channel. And thanks for watching and listening and reading. And we will see you all next week.